All right, let's talk about some classifications and which financial statements they show up on. My name's Kirsten. I'm a CPA and accounting instructor, and I'm here to help you learn accounting. Let's start with the basics. We have our assets, liabilities, and stockholders' equity. All of these accounts show up on our balance sheet, and they go back to our accounting equation, assets equals liabilities plus stockholders' equity. I already kind of talked about them in another video, and if you want a recap on our balance sheet and other financial statements, go check out that video. But starting with assets, these are like the economic resources that our company has. What does a company have? That's how I always think about it. Things like cars, inventory, equipment, all of these are things that the company has. Now, our assets in general, we expect them to give us a future economic benefit. That's kind of one of the things about assets. Now, when we talk about assets on the balance sheet, they are classified as one of two types. We have our current assets and we have our non-current assets. Now, when we're talking about current assets, we typically are talking about assets that we expect to use within the year. So within the year is kind of your key term for current assets. And current assets are separated from our non-current assets on a balance sheet. You can see them separated if you were to look up any balance sheet for any public company. So what are some classic current assets? Cash. Cash is listed pretty much at the top of every single balance sheet. That is always going to be a current asset. We also have what are called cash equivalents. So you'll typically see those two things together, cash and cash equivalents. And cash equivalents are such highly liquid investments that we expect them to be cash within 90 days. Another common one that we see all the time is accounts receivable. These are accounts, so we've sold something to someone basically on credit, and they're accounts that we expect to receive or turn into cash within the year. So we expect to collect it. Now, I say within the year, but really most accounts receivable turns into cash within probably 90 days. You can also think of accounts receivable as a promise to get cash in the future from our customers. What are some other current asset accounts? We also have inventory. So we expect to get this future economic benefit from inventory within the year because hopefully we're going to sell it within the year and it'll eventually turn into accounts receivable or, even better, cash. Now, another asset account that we have is a prepaid expense. Don't let the name fool you. This is essentially we have paid for something in advance, and until we actually use that prepaid expense, it sits on our asset section of the balance sheet because we are going to incur this future benefit from something we've already paid for. Now, what about our long-term assets? If current assets are supposed to provide us with this future economic benefit within the year, long-term assets or non-current assets are going to provide us with a benefit for longer than a year. So some common non-current asset accounts that we see things like PP&E, which is property, plant, and equipment. As the name suggests, things like land, things like your building, things like your manufacturing equipment. These are hopefully going to last us longer than a year, so they're going to be a non-current asset. What else might we see in a non-current asset? We might see operating leases. Now, there's a lot of complicated rules behind lease accounting, so I'm not going to go super in depth there, but the right to use a space, that operating lease could show up in the section of our balance sheet. Another non-current asset could be intangible assets, things like software, patents. Investments might also show up in this non-current portion of our asset section of the balance sheet. So if we have investments in other companies, this is where that could show up. Now into our liabilities section. So our liabilities, I think of as what we owe, the economic obligations of the company. What do we have to pay later? So of course, if we think of things we owe, this is where we're going to see things like loans. Now, just like our asset section, these are also separated into current liabilities, meaning we're going to owe it within the year, and non-current liabilities, things we owe beyond a year. So when you hear current, go ahead and think within the year. Now, what are some current liability accounts? On the flip side of accounts receivable, which is our current asset, we have accounts payable, things that we are going to have to pay within the year. So typically, if we've bought maybe inventory or some kind of supplies from one of our suppliers, we might pay on credit and we promise to pay them cash at a future date. That's going to be your accounts payable. Current portions of long-term debt. So any current portions of that long-term debt due within a year, that's also going to be in the current liabilities section of our balance sheet. Accrued liabilities is also going to show up in here. Now, what are accrued liabilities? Accrued liabilities are these obligations or things that we expect to pay for services that we have used as a company. So right now, I'm sitting in my apartment and I'm accruing utilities expense as I have these lights on. And so if I was accruing that, I would have an accrued liability. I have this obligation to pay for these expenses that I'm incurring. That's your accrued liability. So let's talk about our long-term liability accounts. If our current liability accounts are accounts that we owe within a year, then long-term liabilities or non-current liabilities, they're going to be accounts we owe outside of a year. So things like long-term debt is going to fall here. If you take out a loan for 10 years, that is going to fall under a non-current liability. What else? Bonds payable. So if a company issues bonds, they're often going to be a long-term liability until they come due. Now, earlier I mentioned leases could fall into the non-current asset portion of your balance sheet. Now, those leases also have a payable component, and so those leases are also going to show up in the non-current liability portion of your balance sheet. So that brings us to the third section of our balance sheet. The third statement of our balance sheet is our stockholders' equity. Now, our stockholders' equity is this residual ownership in the firm. So it's everything left over once you take assets minus liabilities. Now, that ownership can be from either internal sources or external sources. The external sources, that's often what we think about when we think of common stock. But the internal sources, that's our retained earnings. Now, while we're talking about this section, I think it's important to note that stockholders' equity can actually have a few different names. Sometimes it's just called owner's equity, shareholders' equity, sometimes it's just called equity. And while I often say common stock because I'm oftentimes referring to public companies, common stock is known as contributed capital. It's this funding from external sources. Another form of contributed capital is additional paid-in capital, which I'll go into in a video that dives deeper into stockholders' equity as a whole. Now, we talked about revenue and expenses previously. Now, where do revenue and expenses flow up into? They flow up into retained earnings. So when we have changes to our revenues and expense accounts, we're also going to see changes in our stockholders' equity because our revenues, our expenses, they're going to flow through retained earnings, which has an impact on stockholders' equity. So remember, anytime you have a revenue or an expense transaction, so basically anytime you have an income statement transaction, there's going to be a flow-through effect to equity. If this video helped you, please like and subscribe to my channel. I'll be dropping more videos on accounting topics throughout the year, focusing right now on our intro to financial accounting. If there's anything you'd like me to cover in more depth, please drop a comment below and I will do my best to get to it as soon as possible. In the next video, we'll start diving into accounting transactions and the accounting cycle.